Hello, I'm Tony Kaye. I'm the editor of Eureka Report, and I'm joined today by Alex Vynokur, Managing Director of BetaShares. Welcome, Alex.
Great to see you, Tony.
Alex, the reason I brought you in today was I wanted to just have a chat about what's happening in the ETFs world. There's always lots going on, as we know. What are the current trends that you're experiencing in the ETF sector?
Sure. Look, the ETF industry in Australia has been experiencing fairly solid growth over the course of the last few years. And 2016 was certainly another year of spectacular growth in the industry. What we're seeing on the one hand is investors, more and more investors being drawn towards exchange-traded funds. So the rate of adoption amongst new investors is continuing to grow. But at the same time, what we're finding is that the number of investors who have made their first investment into ETFs tend to have a very good experience. A very significant number tend to have a very good experience with ETFs, and they intend to reinvest and invest more assets into ETFs. So the latest stats we've seen in 2016 shows us that approximately 80% of ETF investors are intending to increase their investment into exchange-traded funds. So the drivers of growth on the one hand is new investors, and on the other hand, those are existing investors who are just investing more assets into ETFs. The one interesting observation we've made over the course of the last few years is that the early adopters of exchange-traded funds in the Australian market were the self-managed super fund investors. They started using ETFs for diversifying portfolios. They started using ETFs for accessing markets which are otherwise difficult to access, be it international markets, or perhaps other asset classes such as gold or fixed income. But what we're finding more recently is that a significant portion of new investors are actually the younger, millennials, as we often refer to those investors. So those are people who don't necessarily have significant amounts of money yet to invest, but they're attracted to exchange-traded funds by the low-cost nature of the offering, by the fact that they can build a diversified portfolio without needing to have a significant amount of money to invest.
Alex, that's a very interesting trend, and as we know, exchange-traded funds are proving very popular because you can get exposure to different markets, different thematics, different indexes. What's your experience at the moment? There's a lot of volatility in the market, a lot of uncertainty. Is that having any effect on where investors are going in relation to ETFs?
Yes, look, it's a great question, Tony. We're certainly finding that since the U.S. election and Donald Trump being in power as the new U.S. president, the volatility in markets certainly has picked up. But what we've seen at the same time is that ETFs have actually been used quite extensively by investors for a variety of reasons. So on the one hand, we are seeing in our own product suite with our set of global sector ETFs quite a significant amount of interest and investment in sectors such as global banks, ex-Australia, who are looking, who effectively providing, exposure to Australian investors to a portfolio of global financials. And of course, the Trump policy seems to be to deregulate financials globally, and a significant number of investors are looking to access, the opportunity that's presented by that through BNKS, which is the ETF trading here on the ASX. At the same time, we're finding areas such as Europe and Japan, currency hedged Europe and Japan exposures to come to the fore again, because people are expecting US dollar to strengthen relative to some of those other currencies, and people are looking to play Europe and Japan through ETF as easily as making an investment on the ASX. At the same time, we are finding that quite a significant number of investors are quite concerned about the volatility, and instead of looking at the opportunity in this volatile market, they're looking to protect their portfolios. And what we've seen on that front is quite a significant level of interest by our clients in the bear suite of funds. So we have 3 funds which are trading on the ASX, being bear, BBOZ, and BBUS. Those 3 funds effectively allow investors to hedge or protect some of their portfolio from downsides risk in the market. So we've seen quite a few investors effectively looking at de-risking their portfolio using those funds, as well as the traditional flight towards income. So funds such as the Dividend Harvester Fund in our suite, HVSD, has continued to see steady growth and steady inflows, and really sort of drawing investors by the stream of income that it's providing on a monthly basis, and the fact that it's providing overall returns would reduce volatility.
So from an investor point of view, once you've decided to invest in an exchange-traded fund or perhaps multiple funds, is there a need to actively manage your exposure within those ETFs? Or can you pretty much buy into an ETF and put it on a set and forget strategy?
Yes. Well, look, like with all investments, keeping an eye on the investment portfolio is probably always a great idea. A number of ETFs are very much suitable for a set and forget strategy. We have a significant number of funds which really provide a very solid and stable core to investors' portfolio. If you take QOZ, for example, the Fundamental Index Australia 200 fund, I mean, that fund provides in a single trade with exposure to a diversified portfolio of 200 largest companies on the ASX measured by their fundamental value as opposed to market capitalization. A very large number of our clients are using funds like that as a set and forget core of the portfolio. And some of the funds that I mentioned previously, sort of be it the bear funds or some of the global thematic funds, sort of are sometimes used by investors as more tactical plays. At the same time, we're finding that some of the, say, global sectors are really providing a very good, sort of set and forget opportunity if you're looking to ride a global trend. So if I take something like our global cybersecurity ETF, HACK, which once again is also trading here on the ASX, investors, sort of we see quite often invest in a fund like that and really, would set and forget, for lack of a better term, and put it aside in their portfolio for long term on the basis of their belief that cybersecurity is going to be a global phenomenon, which is going to be experiencing sort of secular growth, over years and perhaps decades to come. So it very much comes down to the specific fund.
Alex, you're probably seeing that investors, self-directed investors, are investing into multiple ETFs rather than just, perhaps one.
That's absolutely right, Tony. The beauty of an exchange-traded fund is that it provides an Australian investor with an easy-to-implement access to a variety of investment strategies. What tends to happen, with most clients, is that they will construct their investment portfolio, which of course is best aligned, to their own investment objectives. So what we're finding quite often is, sort of investors who might be more focused on income will choose a variety of exchange-traded funds, which can help them build an income-based portfolio. So if I pick an example, they might have an investment in the high-interest cash ETF because that gives them the certainty of cash with a competitive return. They might invest in one or several fixed income ETFs to give them some exposure to, for example, government bonds or corporate bonds. And then on the equity side, they will allocate to Australian equities through a variety of funds, and they'll allocate, sort of to some international funds, sort of with the same objective. And there are some really interesting income options, both for Australian equity exposure as well as international equity exposure. So if you're an income-focused investor, you can build a diversified income portfolio using ETFs as building blocks. Similarly, if you are a growth-oriented investor, you can achieve a very good outcome by using a slightly different set of exchange-traded funds sort of to help you construct that. So the industry in Australia is quite evolved now. ETFs have been in Australia for over 10 years. The market is quite deep, the market is quite liquid, and it allows investors to invest with confidence using exchange-traded funds as building blocks.
Well, thanks very much, Alex, for coming in today. It's been really good to get your insights into exchange-traded funds, and we look forward to talking with you again in the future.
Indeed. Thanks for your time.
I'm Tony Kaye. I'm the editor of Eureka Report.